Hello, everyone. Thank you for attending. Today's topic is uh, Central Texas, Austin, and San Antonio mega region. This is a real-time real estate market update for August of 2022. My name is SeeWing Yee from the Yee Real Estate Network. I'm here to dive very, very deep into the numerical trends of what's going on, not only today, but the past few weeks in relationship to this entire year and comparing the data from the past few years of this local marketplace. The reason why I want to go over Austin, San Antonio, because it is only around 100 miles apart. It is considered a Austin mega region for the future. So massive growth is going on in this market. So again, my background is we help real estate investors to buy out-of-state cash flow rental properties in the hottest place in the country, in the most affordable areas. Cash flow property with 25% now you can cash flow. We've been doing for many years. We have entered many markets over the past 20 years. I would say around 30 markets, 30 regions we have enter into, and thousands of our real investors have pulled the trigger in those markets for the past 20 years. Anyway, this podcast is for primary home buyers in Austin and San Antonio, as well as real estate investors to learn about. All right. So without further ado, let me share my screen. And so this is a Redfin weekly housing market data. So every week, several times per week, we are providing you real-time numerical real estate data on different markets and throughout the country. And today happens to be Austin and San Antonio, and a market that I know very well, because I have several properties located in Texas over the years, including right now under contract as well. And also, we have promoted this market for the past 20 years. So we have taken real estate investors from different parts of the country, mainly from California, to buy great rental properties in Austin and San Antonio mega region for many years. So we know this market intimately, at least my turnkey providers in the local market. We have a network of agents located in Austin, San Antonio that can help people to buy primary homes and rental properties, whether you live in a local area, whether you're migrating from other part of the country into Central Texas, we have the resources to help you. All right, so without further ado, let me go over some great economic data. This is a real time. It changes daily, changes weekly, change monthly. We're going to continue to update you for the foreseeable future about what's going on in the real estate market all over the country. And today is all about Central Texas. So thank you for watching. By the way, feel free to subscribe to our channels and click the like button, and also enter our website to become a free member of our weekly newsletter in our website. All right, so you can. All right, so without further ado, let's go over the pending home sale in Austin Metro, which is Austin Metro is not only about Austin. There's a lot of submarkets like Liberty Hill and Round Rock, Georgetown, and many smaller cities within the Austin Metro. It's a very huge market these days, and I know every submarket is very different. Every neighborhood is different. So every block is different. So we can't lump everything together. But all I can do is share with you the data and from a big picture perspective. All right. So I'm sure you understand. So pending home sale. Okay, let's go over the block mark as you see here is for the current year 2022, and as you can see right here, the graphs, the orange color is the year 2021, and then the pink color square is 2020, and then the The blue color is 2019, right before the pandemic. So let's go over what's going on today. End date July 31st, 2022, and the pending sales. Pending sales means the sales that are going under contract. Does not necessarily mean this transaction will close 100%. Some people will cancel out, some people will drop out. So the actual sales will be less than pending sales. But somebody entering the contract, so here's what's going on. There is 545 pending sales, which is, you can see the downward slope, right? Ever since May, June, July, August, like a little bit less than 3 months ago, when the interest rate has skyrocketed from 3% to 5 to 6% right now, that makes home affordability twice as hard for many buyers. So and the fear of recession, whatever, with inflation getting out of control, that put a lot of scare into people, right? So that's why the trend has gone down in terms of pending sales right now, which is 33% year over year less than 2021. As you can see, 2021 is the orange color. The pending sales is a lot higher, 839 pending sales last year during this time. So if this trend continue, then the supply of inventory in the Austin metro market will be very challenging. And whenever the supply of inventory is a lot less than demand, that causes home prices to go up. So, all right, economics 101. If demand exceeds supply, that means the prices will usually go up. And then, although the demand has tempered recently, obviously through the interest rate increase, 5 to 6% interest rate on a historical basis is still low, believe it or not. So people out there, don't freak out just because you got spoiled with a 3% or less interest rate, which is a record historical low. The last 18 months, you will probably never see this low interest rate again in your lifetime, I think. We don't know. All right, so pending sale is one issue. So the next thing we want to talk about is active listing, all right? So let's go with the active listing. That means how many homes have entered the market, have not been under contract yet. So you look at the trend for this year. Now, this is very, very interesting in the Austin Metro. There are 10,000 active listings at this very moment. So there's a 53% increase year over year. So let's look at which is skyrocketing. So sellers are putting their home into the market for various reasons. Some want to sell because of the right time to sell based on their life situations. No matter what, they want to sell, not under the stress level, of course. Some people have this, what we call FOMO, F-O-M-O, fear of missing out. Some of these sellers think the market is going to crash, and therefore they want to take the money and run, sell the houses, and pocket their massive amount of equity they achieved, especially in the last couple of years during the pandemic. So, so 10,000 listings. Now, that's just the active listing. It remains to be seen what is the actual sales, but we will go over that the best we could. Let me see. The orange color is 2021. Last year, only 6,600 active listings in the year 2021. So, and then before the pandemic, 2019, there are 8,900 active listings. So it's a dramatic change, as you can see. And then let's talk about the price drop. Now you're thinking, once I click this, don't take it the wrong way. Price drop does not mean that the price of homes in Austin is, it's going down. It's based on the initial over-exaggerated listing price by the seller. Given the demand is not as high as in the past, they have to reduce their listing price at least once or twice. So as you can see here, the percent of active listings with price drops is 13% year over year from which is 8.2% higher than a year ago. So this is a huge gap. This is very mind-boggling to be honest with you, because last year 2021, I mean 2019, the percent of active listings with price drop is only 7%, and then last year 2021 is only 5%. So again, remains to be seen in the next few months or toward the end of this year what's going on. Again, this is not the actual price drop. It's the listing price, which is seller that they just didn't get the memo, right? That the market has reset and they priced their homes way too high. And then realize that they have to reduce their price. So it is a concern, but it's not don't freak out, right? That's all I have to say. And then new listings, median price. Let's look at this. New listings, median price. Hold on, let me click on this. New listing median price, right? This means that the price that are out there right now is a whopping 538,000. We're talking 14% increase year over year from last year, 2021. This is June. If you go back, this is July 31st. If you go back to June the 5th, I mean, the high end is 561. I mean, there are many homes in Austin is over $1 million, right? Many are around 700,000, and there are some at around 400,000. So the median new listing price is 561, just the listing price, okay, not the final sales price, and it's up 24% year over year, which is when you see a gap between this much of a gap between 2021, 2022, that tells you the home prices have skyrocketed. And not only that, you look at from 2020, at the beginning of the pandemic, right, March 2020 to 2021, we talk about 24% appreciation. Then from 2021 to 2022, another 24%, about 50% appreciation in a mere 2 years. Then let's go over before the pandemic, 2019. The new listing price was $328K. Think about it for a moment. $328K. Remember this number, 328. Now, 3 years later, 561. We're talking almost 100% appreciation in a mere 3 years. On historical basis, the historical appreciation rate over past 100 years or whatever is only about 4 to 6%. For you to achieve almost 100%, this is unprecedented in history of real estate. So I'm not saying that's good. I'm not saying that's bad. For those real estate investors that purchased 3 years ago or 2 years ago at 300 to something thousand, your house is potentially has increased to almost 600,000 in a few years. So you guys, and home buyers as well, home buyers that most of you came from out of state, came from California, right? The remote ability to remote work and the high tech workers from California and Northeast, wherever are entering into the Austin market, because Austin is Silicon Valley 2.0, right? Austin will be Silicon Valley 2.0, if not already. It's amazing growth. Remember, like 18 months ago, a home listed in Austin somewhere, there were like 300 offers. 300 offers for one house. And the homes will bid up like 30% over asking price. Do you remember a mere 12 to 18 months ago? Anyway, I know it's frenzy. This is weird. But if your home buyers are able to outbid everyone else 2 or 3 years, a year to 2 to 3 years ago during the pandemic, investors alike, you guys are laughing your way to the bank, right? For those of you For the majority of you, they did not take the plunge. For the investors did not buy in the Austin market a year, 2 years, 3 years ago, you guys are like slapping yourself silly. All right. So that's now, I'm not over dramatizing everything. Now, for those of you who bought that you still have these properties right now, you guys are a little bit nervous. Maybe, I don't know. You think the prices might go down? And if so, how much? I don't know. No one have a crystal ball, right? There's a lot of fear out there. But at the end of the day, the supply of homes still are very, very low, historical low, still historical low. And the demand, although it has decreased quite a lot, still a lot of demand moving forward, especially if and when the interest rate drops from 5 to 6% into 4% range. And watch out. Okay, we may have a real estate boom 2.0 sooner than you think. Now let's look at month of supply, right? This is critical. 6 months supply is a balanced market of home, right? 6 months. Some people say 5 to 6 months, but in the Austin market, I went because we have a network of realtors, in this market that are helping people, primary home buyers to buy and investors to buy from out of state. So we know what's going on. Last year, I mean, there were like 1 month supply of, but less than 1 month supply of homes in Austin Metro, which is mind-boggling, right? Which is mind-boggling. So right now, okay, because there are 10,000 new listings, the week's supply is 18 months, July 2022, last month. So 4 weeks divided by 18 months is a little bit more than 4 months supply of inventory. So we are still is a seller's market, but buyers, 4 months supply is slightly leaning towards eventually a buyer's market. If this trend continues, we don't know. Okay, it remains to be seen. So buyers have more opportunity to pick the homes that you want. It's no longer multiple offers, this and that. So you can get some good deals, especially from new construction, right? Builders that want to release their homes. Anyway, so yeah, so you look at weeks of supply, like 2021, 7 months, which is less than 2 months, right? Last year. So it's extremely low supply. That's why home prices have risen so much over the past 2 years during the pandemic. And then 2020 is only 2 months of supply. And before the pandemic, 2019, is 3 months supply of inventory. All right, so new listings to medium price. So let's look at new listings to medium price. New listing, medium price. This means, no, I think it's the wrong one. What am I doing? I'm trying to, oh yeah, average sales to list ratio. What this means is the list price that you have out there, when it's finally sold, did the buyer buy at list price, above list price, or below list price? So let's look at the data for right now. We're looking, average sale to list price is 1 point. So that means nobody was overbidding. I mean, whatever was your final list price, it was sold at that price. So, which is good, right? But before this June, back in as recent as April and May, people still have to overbid, right? You see 1.06, people have to bid 6% over the list price as recent as April, which that was before the interest rate rise, right? So anyway, things have changed in a mere few months. So it's just the interest rate change had caught everybody by surprise. Anyway, so now you see, then of course during the last year, again, people overbid. People so was way above asking last year. 2021, and 2020, and so forth. All right, now you see what's going on. And anything else we need to go over here? Let me home sold. Let's click on home sold. Again, this is another very important metric. The home sold is only 593. Year over year, there's a 31% less homes sold so far this year, 2022, than a year ago. So that means people are not buying as much and sellers are not selling as much, which is, happens. All right, anything else? So the recap with this Austin market is homes are not being sold. The sellers are not selling enough homes, so we will continue to see, at least for the moment, the mid-year 2022, there's still extreme low supply due to high interest rate. A lot of buyers are sitting on the sidelines. A lot of investors are sitting on the sidelines for whatever reason. So it remains to be seen how the market will continue in Austin. So now, with that in mind, let's go over to San Antonio. The reason why I want to discuss San Antonio, because San Antonio is only 2 hours south of Austin, and it has a lot of similarities and have a lot of connections. Okay, I'm going to let you know what I mean by that. So let me scroll down to San Antonio. Just give me a moment. Pardon me. If I can do this faster, I would. Here it is, San Antonio, Texas. All right, the reason why I show San Antonio, Texas is because, let me compare. One thing I want to show you is new listing median price. Now, we already told you that the high-end price in Austin Metro is almost 600,000, right? Now, if you come down 2 hours below Austin in San Antonio, the median list price as of today, as of July 31st, 2022, is $348, presumably for the same square footage. What if you have the ability to work remotely, right? And you're in high tech, whatever, giving to the house in Austin is twice as more expensive. All you have to do is, if you have the ability to work remotely, maybe a hybrid work model situation with your job, what I'm beginning to see is people are migrating from Austin into San Antonio because they're getting twice the amount of house for the money. Do you understand? Do you able to get that? So I see a trend. I see a reversing of migration, the local migration, not from out of state. People have plunged, all the high-tech population have entered into Austin for the past few years from all over the country, right? That's why Austin has gone through a tremendous boom the last couple of years, not just the last few years. For many years, it's just gotten out of hand. So people, I see it, are moving into a San Antonio market. So San Antonio before the pandemic, look at the median price of homes, which is by the way, I used to live in San Antonio. I be it long time ago. I'm embarrassed to mention, it's more than 30 years ago. I was stationed in U.S. Army active duty, Fort Sam Houston, in the mid-1980s. I retired from the U.S. Army for 20 years. I retired like 20 years ago in the year 2002. So, and I'm very familiar with the San Antonio market. I have helped hundreds of risk investors to buy rental properties in San Antonio for many, many years. I've seen the growth. It's a very stable market. Anyway, very stable market. So before the pandemic, the median list price in San Antonio, 239,000, right? And now from 239 to 348, okay, modest increase, 14% in increase in pricing from year over year from last year, 2021, then from 2020, another 10%, so 24% plus yeah, 24% appreciation in the past 2 years. So San Antonio have increased in value a lot less than Austin, but the market is very desirable, is a good quality area. So having said that, so San Antonio is doing well. We see a lot of potential in San Antonio because of what's happening in Austin. So all right, and pending. Okay, let's go over the remaining. Let's go over pending home sale. Pending home sale in San Antonio. Oh, they don't even have it. I don't know why. Let's go over active listing, new listings. New listings is it's not bad. It's only 5% less than last year, 951 sales. So things are pretty consistent. It's very consistent with last year also, right? So you see the lines are very close for the past 2 years. So there's nothing skyrocketing from either direction, if you will. So pretty stable market, if you will, nothing. And then let's go over the potential price drops. This trend, 10% of active listings with price drops. I don't know. Don't read into this data too much. Again, just like everywhere else in the country, a lot of the sellers they did not get the memo, right? They list their price way over what the market asked for. So slowly they're being realistic. They're going to do a price drop from one price drop to a two price drop, and that's indicative of this almost vertical trend. So remains to be seen. Is not that homes are dropping in value from the fair market value, whatever. It's not that. All right, just be aware of that. But in prior years, pretty stable, right? In 2021 and 2022. So new listing. Let's look at new listing median price. Again, new listing. No, I'm not sure about this metric. New listing median price. Okay, look at days to close. Days to close, 22 days. So it's pretty quick closing. Still, demand is still there because the price is so low in San Antonio. People can afford it even with a higher interest rate, right? And the median price is only like 348. So things are looking good. So anything else I need to go over? Medium sales price. Like I said, 338. Very, very reasonable. Still very affordable market. It has not appreciated to the extent that Austin, which is 2 hours north of San Antonio, has really exploded, and things are people being priced out. People in Austin or cannot afford to buy the high price from Austin, so they're coming down to San Antonio to buy or to rent. Meanwhile, so the rental market is very, very strong, very stable. Always has been, always will be. So at the end of the day, in my recap is that the Central Texas is a mega region, is going very well. I do not anticipate any kind of significant price drop, if at all. Maybe 5% price drop in the next few months. Those price drops are probably associated with a very high end prices, like $800,000 homes or $1 million homes. They may drop 5 to 10%, and that's how it may skew the data. But lower entry level homes, 300 to 350 price points in San Antonio is still a very, very competitive. You'll still see maybe 2 offers per house, maybe more, depending on what neighborhood, right? But overall, in Central Texas, Austin, and San Antonio, I do not see any serious issues one way or the other. And so it all depends on the high tech industry with San Antonio. See what's going on. If the migration will still continue from California and elsewhere into Austin market because of the high tech boom. A lot of great companies have moved in here, of course, as you know. but the San Antonio will be the recipient of what's going on. So I see a lot of migration. I will see San Antonio growing faster than Austin over time because of the much lower cost, like 50% price point lower in San Antonio than Austin. That is very significant. It's only 2 hours away, up and down the 35 freeway. So it's just amazing, right? So now you know it's a very, very good market. Central Texas have a lot of room for growth. The job growth, population growth, very warm weather, no state income tax for people to live here. So again, I have several properties in San Antonio, and I know San Antonio and Austin very well. We have hundreds of investors over the years through our help have purchased in the Central Texas marketplace, and we will continue. Of course, inside Metro, it's very, very difficult to cash flow for investors on high price points. So we're entering the sub-market for real estate investors, like north of Austin, like 1 hour north of Austin. There are some lower price, good cash flow properties for real estate investors out there. In San Antonio, in many good pockets, San Antonio, we can still buy rental properties for like 250 to 275K, even 300K, because the rent has skyrocketed. In fact, Austin and San Antonio are two of the top 10 metros where the rent has gone up the most. All right, so that means a lot of people cannot afford to buy, they are renting, and there's not enough homes to rent. So the rental market is very strong, and you can cash flow a little bit, even with a 6% interest rate for investors right now. If you put 25% down payment on a 300K home in San Antonio, you should cash flow a little bit. On San Antonio, in Austin, I would not suggest you buy any properties that are higher than 400,000 because you're not going to cash flow, because rent is only going to max out at around 2,500. So if the rent max out 2,500, you cannot buy a home for higher than 400K because the debt service at 25% down, that is, the debt service is not going to cover the rent that you're collecting, right? So that's all I have to say. Thank you for listening. And of course, you'll feel free to subscribe to my channel, and feel free to make some comments below. If you agree with me, do not agree with me, make a comment down there, and I will do my best to answer each of your comments. If you want to subscribe to our free weekly newsletter, just go into my website, information down below, and just put your email on there, and you will receive great real estate investing information that allow you to buy turnkey properties in many parts of the country, mainly in the South and Southeast. Just give you some heads up. All right, so thank you for listening. I know this is a video longer than it should, but anyway, looking forward to the next video so we can discuss other markets in the US. All right, thank you so much. This is SeeWing Yee from the Yee Real Estate Network. Have a nice day. Bye-bye.